Well, let's get you updated on our grain trade. I'm Marlon Bowling with you, your tour guide to the ag commodities. Here we go. Let's look at the corn. What's it doing here today? We started out weak in the knees, and we still are. May corn down 10 3/4, now down 10 1/2 at 7.47 1/4. December down 6 1/2 cents right now. And let's look at the soybean trade. Our quotes are from bar chart, and we have the May contract 7 1/4 lower at 17.11 1/2. Meanwhile, November new crop soybeans are dropping 8 1/2 cents right now. Over on the wheat in Chicago, May down 20 3/4. Boy, it's taking a breather today. It's down to 10.85 per bushel. That's only 4 1/2 cents from our low of the day there. Had a high of 11.15 last night. On Kansas City's wheat, we have May down 15 3/4 now at 10.95 3/4. So that would put us just a nickel from its low of the day. And if you look at Minneapolis spring wheat, May down 6 at 10.83 1/4. Well, I want to bring in Robin Cross, and he is with StoneX. He's located in Chicago. He is our resident lumber expert that we visit with each week at this time. And Robin, I have to be honest with you. If we take a look here at the lumber prices, I'll bring them up here in a second. My goodness, I was watching here over the last week or so, and it's like bombs away here in that May lumber. What happened to that market this week?
Marlon, you know what happened is we called it yet again on RFDTV. I was like, it was all this smoke and mirrors, I guess would be the best way to describe it during March expiration. Guys got to remember, when March was going up like that, it was purely liquidation, and it's so thin, it doesn't really matter what price is, it's just get me out. So the day the shorts want to get out, we put in new highs. The days the longs want to get out, we put in new lows. So we'll dig into the details a little more here. Let me give you some prices, though. First of all, May, we got at 10.30 even, down 24.30 with 88 trades. July is at 8.75 even, down $8 with 41 trades. For the last several weeks, as you mentioned, volatility continues to be the prevailing factor of the lumber market. With the $57 and $86 possible daily limits, there's a massive disparity between the bid and offer. You combine that with low $2,200 open interest, and it makes for a mess of a market, a big volatile mess, right? So since March expiration, I expected May to have a correction. But, in lumber, you almost got to set your sights for the extremes, right? To me, a normal correction on any given commodity after post-expiration would be, 5 to 10% would be a major move. I mean, lumber moves in 25 to 30% increments, right? So it's really been tough for guys to trade. So we started out 1477 high just 3 weeks ago, and I just gave you the prices, right? If you remember, March made a swing low after it did its same thing, was up in the 1400s, down to 950. So I feel like we're getting close. And, with $86 limits today, you could get down to 968, which would put you, right on pace for that area. And what's really going on here is just fear. It's complete fear-based trade. Longs are nervous because of the massive discount. Shorts are nervous because of the transportation issue. So it really makes for a difficult market to kind of circumnavigate. So just to talk about those discounts a little bit, Random Lengths print came out for the 7th consecutive time, and that's got to be pretty close to record, at a flat $1,400 print. So just to put that in perspective, May is sitting at a $365 discount, and July is sitting at this is definitely a record, $544 discount. So if you had cash needs, you could come to the futures market and cover yourself out for, the next 3-4 months at a massive deduct from what you would have to pay in the cash. We started to touch on the rail issues last week a little bit. There was a CP rail strike. That looks like it's all sorted out already. And I never really thought, I think it was more, saber rattling than anything else, simply because they knew they had the transportation powers that be kind of on the ropes. So this was their chance to make a move. But I didn't think for 1 second there was going to be a disruption. But from our previous disruption, they still have not caught up yet. Mills are barely getting half of the empty rail cars returned that they need. So that's kind of keeping the cash bid. So why would mills lower their prices when they can't get the cars anyways? But in the meantime, futures is future. So guys are like, hey, this is for May 15th delivery. I'm guessing that it's going to be much better shipping. That remains to be unseen. So, you just got to still be very careful. And as I always say every week, you got to almost play the extremes, wait for the market to make a mistake. Because technically speaking, as you mentioned during the break, I mean, you're for the first time since November, you're through the 20-day, 50-day, and we're right on the 100-day. So typically in any other market, when you start to crack those averages, you could see some slippage. So that's I'm prepared for that either way. But I do think that if you needed lumber, the board is the place to come to get that lumber, hands down.
That's a good point. That is a very good point. And it seems like every time we have a chance to talk with you, we have a dramatic move in that market, whether it's higher or lower or historic highs or what have you. Right now, it looks like it could be on the verge of printing a head and shoulders top in that market. We'll have to wait and see if that confirms by next week. But Robin, excellent stuff. Good to hear from you again. Robin Cross of StoneX, he's located in Chicago. We'll be back in just a moment. I'll take a look at our livestock trade next.